Hello traders, and welcome to the Forex Daily Open, May 19th on a Monday, 2014. Thank you for joining me. This is coming to you from tradingwithbill.com, and we're glad you're here. Welcome to a new week of trading, traders, and let me introduce myself to you. My name is William Gilday, and yes, I am Bill. Oh, what a great time to be back at my desk looking at computer screens and watching the Forex market. I do have to admit something though, traders, and that is it is a Monday and the markets are very, very slow. So, we'll have to see how this goes. I think we're going to have to be very cautious today, very, very cautious. No news today, absolutely no news coming out that's going to move these markets. So basically what I'm saying is when the tire hits the pavement, we have no traction. All right, traders, I've been trading from 2006 and 2008. I retired from the fire rescue department in the great state of Florida after a 27-year career. Came on vacation to Pattaya, Thailand, and traders, I am still here in 2014. Started trading full-time, and I love what I do. This is just an awesome, awesome career, and challenging, exciting, and profitable. That's the big part, right? Profitable. All right, let's take a look at the risk disclaimer. Forex trading has a large potential of rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. The big one right here, traders, do not trade with money you cannot afford to lose. If you are trading your expense money for the month or the week, please rethink what you're doing and go to a demo account until you can trade the live markets comfortably in your financial situation. Traders, I'd like to welcome you to my complimentary live trading room brought to you every trading day. The room opens approximately 45 minutes before the London Open. Never trade alone. Trading alone is what? It is a bummer. Make trading enjoyable every day, and come and join us at www.tradingwithbill.com, and I hope to see you all there. All right, traders, like I said, no news today, so we don't have a news slide, so let's get right to the charts. Traders, we are back at the pound dollar. Traders, I had a hard time finding currency pairs to talk about today. There has just been no movement, and you're going to see there is still no movement. So this is being recorded approximately, we're about 1.5 hours before the London Open. And these slides are probably within 2 hours of the London Open, and you're going to see candlesticks are not moving. However, the pound is, in my opinion, starting to resume its bullish trend after a week and a half ago when Draghi said how terrible things were, and the ECB was most likely going to print more money and all that good stuff. So I am looking, what I would say is to continue in the bullish trend, traders. And this just looks like this was just a test pullback. And if you look at the big picture here, you can see that it is stair-stepping very nicely, higher highs and higher lows. Okay, let's go to the pound dollar 1 hour chart. This is the 1 hour chart. And basically, it's a very easy trade setup on the 1 hour chart. If you look at the bottom of the chart, you can see the Williams R percentage indicator, and it is in the high area, and that thing is sticking straight up. I'm expecting this just to continue to the upside. I am looking for some sort of a bullish candlestick formation to enter this long, and we want to take profit at the 200 exponential moving average, and you can see that there. So we're longing this at the 76.4 Fibonacci level. That's where price is right now at the time of the recording. And we're looking at a 1-to-1 risk to reward ratio on this 1 hour chart. So sort of looks okay to me. All right, let's bump over here to the 15-minute chart. This is the 15-minute chart. Same sort of a trade. The only difference on this chart, traders, is do you remember what those blue lines with the blue shadows are? Those are our deviation levels. And I've talked about them before. I will get a video up this week on the site doing an education on deviation levels and where you can find them for free, or if you want them automatically plotted on your NinjaTrader platform. If you're trading with NinjaTrader, which I strongly recommend, and no, I don't make any commission off of that, traders. That's just my personal opinion. I think NinjaTrader is probably the best platform to trade. But if you have NinjaTrader, you can get these plotted for $30 per month and like $1.50 a day. And these come on your NinjaTrader charts automatically. You don't have to plot them. If you don't have NinjaTrader, you can get them and just put them on your charts for free at their website. And that's apexinvesting.com. So we're looking for a pullback here to the 618 or the 50 fib. You can see the boxes shadowed in with the little green arrow. That's where you want to take it long. And we'll take that up to a take profit level. And also, it's the settlement level on our deviations. So that is a nice area to take our shot here for the long side. The other trade plan that you can do, and I did not put this on this chart, is get a candle close above the 200 exponential moving average, which is that green line on my chart, a retest of that 200 exponential moving average, and then take it long, sticking your stop below the low of that move. So you're not getting as much profit, but you can get into the trade comfortably there. I'd rather see us come back to the 618 or the 50 fib, take it there. It's a lot less drawdown. The stop is the stop, and you don't want to get whacked out of the trade, trying to get in it too early. So let's wait for the pullback. I'm really looking at this to wait for that pullback and see if we can get that. I don't think I'm going to take the candlestick above the 200 now that I think about it, traders. It's a Monday, and there is nothing to move this market except for technical analysis. So I'm going to hang with what we got. So we're going to stay at that mode right there. I think that's a good idea. Let's take a look at all three charts at the same level here. And I like doing this, putting all three charts together. You can get a nice look at what's going on. And I told you guys before, girls, I am a visual trader. I like seeing what I'm looking at. I like seeing the trade plan right in hand. And this just looks really nice when you can just look at everything straight on. So this is great. Traders, the deviation levels do work on the hourly time frame. The reason I didn't put it on both is it really clogs up the chart. So the 15-minute time frame, it's sort of spread out and it's much easier to read. All right, traders, let's go to the Euro Yen. This is the daily chart. Now, I am in the position that I think that this is going to continue to the upside off this bounce off the 200 exponential moving average. So I'm looking for this to continue to the upside. I know we got a lot of red candles here, but I think this is just a pullback, and it's going to retrace and then move back to the upside. So you can see its support, and I'm looking hopefully a rejection of that 200 EMA. So I'm looking to take this long in the Euro Yen. Okay, so here we go. Here is the 1 hour chart. I don't think this is going to work today, though, traders. I have to be honest with you. So we're looking for this to close above the trend line. You can see where the green arrow is, and we're looking for a bullish candlestick formation. We want to take our profit right at that pivot. That's an R2 pivot there. Take our profit around that area before the 200 exponential moving average and get out. However, if you look at the Williams R percentage indicator on the bottom of the chart, this turkey's not cooked yet, so I need that to turn around and start pointing to the upside. Well, I'm not going to do anything. I'm going to hang and wait. So this is one of these trades where I'm just going to have to wait, guys and girls. All right, here's the 15-minute chart of the Euro Yen. Again, looking for the close of the trend line above the trend line, and we'll just take that to the upside with a bullish candlestick formation. And we got a little over a 1-to-1 risk-to-reward ratio on this trade. And you can see the Williams percent indicator on the 15-minute chart is starting to turn to the upside, which is a good thing. You're probably wondering why I'm saying that we want to take this trade to the upside. I'm foreseeing that the yen will become weak the first 2 to 3 days of this week and then come strong again. So we're going to see how that works. I'm not too up on that, traders. I'll be honest with you, if you're going to get in a trade, just make sure it's solid. You're better off, if you have any doubt, staying out of the trade. And we know we can always find some reason not to get in a trade. But it's Monday, and the volume and the volatility is horrible. If you want to know what volatility looks like, those some Bollinger Bands on your currency pairs, and you'll see they're curled, they're looking at each other, they're closed, and you just don't want to trade in that type of a market. So I guess my commentary for the day is do not trade unless you're really 100% sure that you can get in this market and get in it safely. These are some, it took me a long time to find these trades, traders, because of this market is just so flat. Asia did nothing today, and there's no news, none. So the Bundesbank chairman is speaking during the Eurozone, and that's like a medium impact news event. It's not that big of a deal, and that's the only thing we have today. There's nothing in New York. There's really nothing in the London session. So traders, really be careful and be safe. Traders, I would like to thank you for joining me today on the Forex Daily Open on a Monday, May 19th, 2014. Thank you for joining me at tradingwithbill.com. Please come and join my website at www.tradingwithbill.com and come to my complimentary live trading room every day. Remember, traders, trade smart and trade safe. Traders, have a great day, and we will see you tomorrow for another.